Srivastava, the founder of Strike Money Analytics and India Chart. So Rohit, to start off with, the range that you had given us earlier when we had spoken the 24,200 to 800 band that you had given us, that has actually worked for the benchmark. From 24,800, we have again come down to 24,200 levels. How are you looking into the benchmark from here on now?
So it's an interesting level. We are at a point where we can say, well, if it breaks down further, then you go into a free fall. But this is happening just ahead of an event. And, if you've been around long enough, many times the markets do sell off ahead of, Fed meetings when, expectations are mixed around whether they'll cut rates or not. Although it looks like everybody's pretty clear that, yeah, this is what they're going to do. This is what they said they will do. But even then, the market seems to have given up ahead of it. So what it looks like, if I just look at our own very short-term momentum swing indicator on strike, it has a reading of around 8 or 9 right now, which means that only 9% of the stocks are showing positive momentum. So when 90% of the stocks are showing negative momentum, we sort of try to think that this may be the bottom end of the range, and possibly post the event, you do see some kind of a bounce back from here. The bigger problem is that whether that bounce will be sustainable, because we keep seeing selling emerge at higher levels, and I do think that the medium term trend is still probably down. We are just inside this range where we can still gyrate to the upside, maybe make that last attempt to push higher. But after that, I do see selling pressure emerge again and head to lower levels. So that's the perspective.
Okay, that's the perspective coming in on Nifty 50. But Rohit, you also give us a sense of what you are seeing when it comes to Nifty Bank, because that's been ailing today, underperforming the market entirely. A 1% cut coming in, and it's not just the private banks, it's the PSU banks that are also ailing. So if you have to play the financial space going ahead, what would your preference be between PSU banks and private banks? And before that, what levels are you spotting for Nifty Bank as well?
Yeah, this choice between PSU and private has been, pretty tricky. Because there are times when one performs and there are times when others. For the last few weeks, it's been more about private banks, especially, uh, which is not reflected in the private bank index. When you look at frontline names like, say, ICICI or HDFC and Kotak, which were trying to make a comeback after 2 years of consolidation. But apart from that, the rest of the pack is really not showing much of a improvement, and that is why overall that is where the hope was really coming from for a banking rally. The rest of it is not really showing that kind of hope. I think most of the PSU banks have just hit their 61% retracement marks and started to sell off. So again, I mean, I would say the same thing. While we can have some kind of a bounce, it may or may not sustain, say for Bank Nifty also. The last time we bounced off around 52,200. We are sort of in that range right now, slightly below or above it. And either we do make one more attempt from here to go above 53,600, but it may not sustain, so there's the chance that it goes up there and then again sells off. I mean, alternately, if we break the current range, then this even the Bank Nifty would go into a free fall and then retest the 50,000 mark. So that is the risk. But again, I think there is some short-term oversold reading that should give us some kind of a relief in the next couple of days, is what I'm thinking.
And lastly, Rohit, the Nifty Pharma, it's supposed to be a pharma day today. All the pharma stocks have been gaining. The Nifty Pharma is a top sectoral gainer. Do you expect this positive momentum to continue for the pharma stocks?
So pharma, IT, FMCG, these are your defensive areas. But when I look at a 1 month performance, at least pharma and FMCG have been one of the worst performing sectors, and IT has been the best performing. So IT is the only standout, I think, out of all three. The pharma index may be up today, but it's not really been giving us the momentum that we would like. Even then, I wouldn't really mind if I have to. If I have to pick up on something, I wouldn't mind picking up a bit on pharma. I would probably avoid the rest right now. And given that US equities have been so hot, the IT sector is good, but you need to, keep a trailing stop loss or something like that along the price, because whenever the US markets reverse, so far you're only seeing selling in the main indices like the Dow or the S&P. But as and when it shifts towards the Nasdaq, you might see selling in IT stocks as well. So keep that in mind.
Okay, thanks for that take coming in on the sectors that you're liking and you're not at the moment. Rohit, on that note, we'll let you go. Thanks so much for joining us on ET Now. But while we have been talking about what the